We're not live on YouTube, so we're going to start. Okay, today we are. So today we are discussing. What we're discussing today is called the Fibonacci. Remember, I told us that divergence in our last class helps us to have an early entry. Divergence helps us to have an early entry, or either a buy or a sell, depending on what we're seeing on the chart. If it's a regular bullish divergence, it means we're going to buy. That means this market is selling and it's selling to a support where we need to buy. And if it is regular bearish divergence, we are looking for opportunity to sell. That means the market will be buying and we're looking for a sell. If it's a hidden divergence we said hidden divergence is that the market is buying, but as where you see the hidden divergence is that the market will be selling. So to you, it's like the market will sell forever. No. Once you have spotted a hidden divergence, it tells you that the market is just doing a pullback. It is doing a pullback and it will continue the buy. So that hidden divergence is a continuation pattern or indication, while the regular divergence or regular bullish or bearish divergence is a reversal. So don't get it twisted. Understand these two words in the market. We talk about the reversal and a pullback. These are two different things. Pullback is not changing the trend. It is just doing what? It is just going for a retest to continue to sell. So pullback is that the pullback will not take out the low of the swing. It will not take out the low of the swing. And that is a pullback. That means it is selling for a short time and it will continue the buy. Why a reversal is that it is change of trend. If it's buying before, so we're now expecting a change of trend. And at that point in time, distant time, you start expecting to see a lower high, lower low, lower high, lower low. It tells you the market is now bearish. But if you see that the market is doing a pullback, it is not that the market is bearish. You can say the market is doing a short sell. That's why you hear traders who say, look, I am buying, selling whatever asset in the short term. That's when they say I'm selling it short, it means that they're not staying long in the market. It simply means that what they are doing is trading a counter trend. That the market is a trend, is a bullish market, but you want to take advantage of the sell to make small profit. But at that point in time, you are not staying long. Now, since you are not staying long, what will help you to understand at what point you are going to sell or you're going to buy is what we want to treat today, and it's called Fibonacci retracement or extension. Called Fibonacci retracement or extension. So Fibonacci retracement, Fibonacci, it's propounded by somebody, an Italian mathematician. An Italian mathematician is the one that propounded. Let me get my slide. That propounded the Fibonacci, and his name is Leonardo Pisano. He is an Italian mathematician. He brought his idea of mathematics into trading, and to a great extent, it has been working. To a great extent, it has been working. So let me get my slide. I'll share the slide now. Okay. Now, this is Fibonacci. Fibonacci retracement and extension. We said that the founder of Fibonacci is Leonardo Pisano. He's the founding father of Fibonacci sequence. He was an Italian mathematician from the city of Pisa and is credited with introducing the Fibonacci sequence. I've always said I don't like doing a theory. We'll go straight to the application of Fibonacci. I'm not here to start telling you how they got the sequence. You can read all of that if you have the manual. You can read all of that. I'll just give you this is the computation on how to get it, the sequence. How to get the sequence. It's just for knowledge sake. It has nothing to do with your trade. Those things have been factored into your trade. So you don't need to bother how to get those theory on how to get the. But even if you want to do that based on knowledge sake, then you can get the manual and read all of that. So let's continue. So now what we're saying is that Fibonacci told us that I have a popular slogan that for every swing, Fibonacci is telling us that for every swing, there will be what? That there will be a discount, that there will be a repricing for every swing. That for every swing, the market will do a pullback. That is why if you don't catch that swing, don't worry. What you should be expecting is that you should be expecting a pullback to buy or sell that. I was discussing with somebody in the office today, not JPY. Euro JPY. I actually missed this market this morning. That's so bad. Let me go to I want to show you a swing, then we'll see how it is being repriced. GBP-USD. This is an opportunity to buy GBP-USD. Okay, now what we are saying is that for every swing, now look at this, what we say a swing. A swing, listen, I want to start with the basics. A swing is a movement of price. Movement of price without a significant retracement, without an obvious retracement, without a valid retracement. That is what is called a swing. Now, when you see the market, if this is called a swing high, and this is called a swing low. Get it clearly, please. This is called a swing high. Swing high is that when the market is buying, the market did a push up, the market is buying. And a swing low is that the market is selling. They are all swings. That's movement of price, a sharp movement of price without an obvious retracement. A retracement is that, for example, look at this gold now. This is gold. The market sold from here to this point. The market sold. If you see that there is no obvious retracement in this market, it has always been bearish candlestick. 1, 2, 3, 4, 5. Now this one is forming. They are all bearish candlesticks. Now the question is, there is no obvious retracement in this market. So what are we expected to do? When you see this runaway of price, what you're expecting is that you are expecting, one, you're expecting a pullback. You are expecting a pullback. If this market pulls back, there are two things when it gets to this point. It's either it will continue and change the trend, or the market will get to this point. If it does not take out this high, it tells you that the market is coming down. If it does not take out the high, you'll be expecting this kind of move, that the market is coming back with a momentum. So that is what we're saying, that when you have seen this runaway of price, if you're not in this market, don't worry, don't worry. leave it. What you are expecting is that you are expecting to do what? To buy or sell the retracement. The retracement. That is why on your WhatsApp group, I said, do you know to what extent you are to buy or sell a retracement? Fibonacci retracement will tell you to what extent you buy or sell. We'll discuss that tonight. So now, once you have said, okay, let me buy, when this market has given you an opportunity to buy, now you're looking at it because for me, I'm looking at buying gold. This market, this sell, I'm looking at buying the gold. So I'm allowing the market to get exhausted. And from what the candlestick is telling me now is that the market is almost exhausted. Why? Because this candlestick gives this low here. If this market would continue the sell, this candlestick, this one would have created a lower low. But it did not create a lower low. What did it create? It created a higher low. It created a higher low. If you look at it, this is the low, and this is a new low. And this new low is higher than the previous low. It's telling me that the strength of the sellers is getting dissipated. Now look at this, look at the candlestick, look at this other candlestick here. The bearish candlestick has momentum down. Look at this one that is forming now in the next 4 hours, which take us to the close of the market at 11 o'clock. Look at this one that is forming. The market have done, this is 8, 9, 10, 11. Okay, the market is about doing 1 hour now. Until this candlestick close, we cannot take a decision. We'll wait until this candlestick close. If this candlestick close and it did not take out this low, then by tomorrow morning, they will be looking at opportunity to buy this market. And if we're buying the market, we're buying up to this point. We'll be buying the market up to this point. Now, the question is, why am I buying up to this point? Fibonacci, if you are a Fibonacci trader, Fibonacci, Leonardo Pisano said, there are places where price, if you're using Fibonacci retracement or extension, there are places where price you get to, and it has high propensity to change the direction. Let me tell you today that Fibonacci is a way of trading support and resistance. It's a way of trading support and resistance. It's another way of trading support and resistance. Fibonacci is another way of trading support and resistance. Those Fibonacci levels, those levels, as we will say today, those levels are support and resistance levels on our chart. They are support and resistance levels on our chart. And now, and now Leonardo Pisano said, if you are buying, I've just given you an example now. The market says, Leonardo Pisano said, there are areas on this lane. Look at it, this market from here, look at this swing that I've drawn here. From here to this point, for every swing, it is considered 100%. For every swing, it is considered to be 100% if you have gotten a swing. So what you do is that for you to trade Fibonacci, listen, please, for you to trade Fibonacci, you should have identified a swing. That is the first thing that you must identify. Where is the swing? You must identify a swing. By the time you identify a swing, the next thing is that you pull your Fibonacci. By the time that swing has been exhausted, then you pull your Fibonacci to do what? To trade the reversal. You pull your Fibonacci to trade the reversal. That is what we are saying. You pull your Fibonacci to trade the reversal. You pull your Fibonacci to trade the reversal. I want to show you something. Let me see if it works. This is this, yes. Coming, just be with me. Okay, I got it there. Okay, now let's go from the known, what we discussed yesterday, to what we're discussing, sorry, on Monday, to what we're discussing today. Now, remember we talked about what's it called, divergence. And if you see the market now, I just believe that this candlestick will close like this, that the candlestick will not come and take out this low. That is my belief, that's my bias. But I'm not giving you a signal. Take note so that you don't quote me. What I just want to show you is, in case it happens like that, that is what I am looking at. But because this candlestick that is forming now, this current candlestick, I don't know to what extent it will form. I don't know if it will come below this or it will go up. Whatever it is, we must allow today to end for us to take a decision on this bias. Now, let me say now, for example, this candlestick closed like this, or closed as a bullish hammer, or a bullish indecision candlestick. Okay. Now, what it means is that this is the current low that this market has created. This is the last low before this one. So now this market is doing higher low, while this one is doing lower low. Higher low, lower low. According to our Bible, what are we expected to do? Lower low, higher low. What are we expected to do? People of God, can you remember? When the market is doing higher low and the oscillator is doing lower low, what should be our bias? People that learn divergence on Monday. Eh?
To buy.
What kind of divergence is that? Just tell us to buy. Huh?
That's the
Huh?
I'm coming now.
I'm waiting.
Let me see the chart.
I'm waiting.
The chart.
Look at the chart here.
No, I mean,
Look at the chart here.
It's a bell. No, I mean
look at the chart here.
The
price is doing higher low. Catch the Bible.
It's a bearish regular divergence.
Price is doing higher low. Price is doing higher low.
Bearish regular divergence.
Bearish no. Price is doing higher low. Oscillator is doing lower low. Higher low, lower low. Look at it here. Yeah, look at it here. Price is doing higher low. Oscillator is doing lower low. Price is doing higher low. Oscillator is doing lower low. Let's go back. Price is doing higher low. Oscillator is doing lower low. And it is doing lower low. And please mute your mic so that it will not be echoing. Price is doing higher low. This is the higher low. Look at it here. This one here. Price is doing higher low. Oscillator is doing lower low. Let's go to our chart. Price is doing higher low. Oscillator is doing lower low. And they said what we should be expecting to do is that we should be expecting to buy. That's bullish hidden divergence. And I told you bullish hidden divergence is what? Is a continuation pattern. I just said it. Now look at it. Price is doing this. So what it's telling us is that this thing that the market is selling, that it is just doing what? A pullback. The market will continue the buy. It is just doing a pullback. The market will continue the buy. Did you get it now? That it is just this sell. The market is uptrending. It's an uptrending market. If you look at it, it's an uptrending market. Now, at this point, the market came back and sold very well. This market sold over how many pips today? This market sold over 753 pips. Gold sold 753 pips. Now, it has gotten to this point. Assumably that this market will not create a low lower than this one I have drawn. So it is expected that this market we are in for a buy. Now the question is, to what extent are we buying? You cannot buy and say, okay, this market will take out this high. No, it is not for you to say it will take out the high. The market can come here. It will not take out this high, it will come down. What is it going to do? The market is going to feel the imbalance in the market. So Fibonacci will help you to know to what extent you will trade this market. So now, you see the analysis. Now this market, if it closes like this, it has told me that we should be expecting a buy on this market. Now, if I want to buy this market, I will not buy to this high. What I will buy to is this my order block. I will buy because if it gets to this point, two things will happen. It's either it will break and continue. It is not you that will break it. You will just wait for people to break it for you to engage the market. So what I will do is that for safe entry, I will enter the market for a buy and take this high as my stop loss. Now the question is, if I am trading using Fibonacci, what Fibonacci level is this? What Fibonacci level is this? You as a Fibonacci trader, if you have backtested and you have done your analysis and your homework very well, you will decide which of the Fibonacci trader you want to be. For me, I am a 61.8 retracement trader, 61.8 Fibonacci retracement trader. Now, I will give you the different Fibonacci levels so that by the time you backtest, then you can say, okay, the market, I am a 50% retracement level. I'm a 38.2 retracement level. I am 23.6 retracement level, 78.6 retracement level, or 88.6. You will decide that. Like for me, I told you, I am very comfortable at 61.8 retracement level. Okay. Now, what I am saying is that, let me remove this so that I just did this to show you based on what we have done. The market is about creating a divergence. Okay. Now, this market, this is a swing. I said the swing from here to here is 100%. The market have done a 100% swing. The market have done a 100% swing. So what are you expecting? You're expecting a pullback. Why? Because we know market does not move on a straight line. The market does not move on a straight line. The market will move, it will do a pullback. That pullback is that it is giving opportunities for other buyers to engage the market. You must understand that it is giving opportunity for other buyers to engage the market, because the buyers that joined that swing must have left. They have collected their profit. They have taken their profit and they left the market. And since they left the market, the momentum of that market reduced. So now what the market coming back is coming back to attract more buyers to engage the market so that they will push and take out that high. Because it is momentum that takes out high, that takes out a former resistance and turn it to a support. It is a momentum that does that. What would this support and resistance? We elaborated on that, and that's actually not what we're talking about here. So once you see a market that, okay, look at, let me give an example. Have you seen this candle now? Look at the candle that is forming there, the current candlestick. Have you seen it that it is turning bullish? But you cannot decide. Let nobody go and enter a buy. You're your own peril. You cannot decide until this candlestick has closed. This candlestick can come and create a big hammer here. But you will see it before the end of the market, it will come down and close as a bearish candlestick. That is why you must not take a decision. You must wait until the end of today for you to decide what you are saying. Okay. So now, what we are saying is that this market, for example, this market have done a swing. This is the swing. This market have done it. From here to this point is the swing that this market have done. Look at the swing here. From here to here, that's the swing that this market have done without an obvious replacement. So this one is called a swing low. A swing low. If it is a buy swing, that's a bullish swing, we'll say it's a swing high. Okay. Now, if you want to draw your Fibonacci level, you will draw Fibonacci from where the swing is coming from. Very important. Middle. Once you have, please, I need you to understand this. If you are drawing your Fibonacci, just as this market now, let me take, for example, let me remove this one so that we don't get confused. Now, look at this swing. Somebody should tell me, for a swing low, where is the swing coming from? Please, somebody should tell me, a swing low, where is the swing coming from?
It's coming from the top where you draw this box.
That's from here, right?
No,
Thank
from that, yeah.
Yeah, from this week here now, that's the swing. That's the swing.
Yes.
So this down here,
Yes.
right? Good.
Yes.
That is for a swing low. That's a bearish swing. It's coming from up to bottom. A swing high is coming from bottom to up. I'm saying this thing because by the time you want to draw your Fibonacci, if you don't draw it well, you will have a distorted result. If you want to draw your Fibonacci from a bearish swing, please, you guys should mute your mic. If you want to draw your Fibonacci from a high, that's a bearish swing like this, you drag it from the weak, the highest weak, to the lowest points, the low. That is a swing low. If it's a swing high, we'll come to do that. Now, what we are saying is that this is 100%. This swing, if this swing now gives us, like how we've spotted a divergence now, I told you divergence will help you to have an early entry. Aggressive traders would have entered this market for a buy and take this low behind this line as a stop loss and wait, depending on those ones that have. Please, if you don't have equity, don't go to gold. I beg you with the name of God, don't go to gold. Look for other currencies. Everything that happens in gold happens in other currencies, please. What we're saying happens in other currencies. So those persons that have equity, that have money in their accounts, that's the equity is huge, they would have entered this market for a buy while spotting this divergence. Remember, I just told you that this is a divergence, we spotted it. And I told you that this market, we're expecting a buy. Now look at the market has started doing this. But a caveat, you cannot decide until this candlestick has closed. But aggressive traders would have entered this market, have done since we said this thing. This market have done 34 pips. The market have done 34 pips. So somebody that have used one standard lot, only this thing that we're talking about now has gotten $300 from gold. Imagine the powerful effect of equity. Even if you use a 0.01, this market would have given you $3. As we're speaking now, the market would have blessed you with $3. Like we tell people, trading is not difficult. The only thing is having the patience to learn. If you've, like when we did, I explained risk management and how to manage your trade. I told you if you want to do 10% or 20% of your account size and you have $100, you're expecting $20 every month. Every month you're expecting $20. So if you break it down, you're expecting $1 every day. Just as we're speaking now, the person has gotten $3. The person has met a target for 3 days. We'll say, how does it work? But that's what happens. It's not a voodoo. We're seeing it as we're talking. Okay, so that's not our concern. Let's go. Don't worry if you miss it. There are so many opportunities in the market. Okay. Now, this is 100% swing. This is 100% swing. When the market have done a swing and completed the swing, it is 100%. So Fibonacci said there are levels we're looking at. Look at the Fibonacci retracement levels. I told you I'm not here to tell you how we got those levels, because if we start it, brother, we will not finish Fibonacci even next week. And at the end of this, some persons now will be leaving me in this room. So it is not necessary. How they got it is actually not important to you. Let's get the levels and continue. Now, let me write the levels here for you. Fibonacci said the level is 0.23, 0.23, 236. Level 0.236, and when you convert it, it becomes 23.6. That's when you divide it by 100, it becomes 23.6. That's the percentage. That's 26%. So just permit me, let me use the percentage at once so that we'll get it very clear. So for now, I will use I will remove this 3.6 retracement level, 0.6% retracement level. Now the next one is 38.2 retracement level, 38.2 retracement level. Please, you're gonna write this thing down so that it's actually on the, if you have the manual, it's actually there. Or if you don't have, I encourage you to get your manual. So if you have refused. Okay, we'll have 38.2, we'll have 50.0, 50% retracement level, and we'll show you how to apply that. We'll have 61.8 retracement level, 61.8 retracement level, 61.8 retracement level. We'll have 78.6 retracement level, 78.6 retracement level, 78.6 retracement level. We'll have what's called we'll have 88.6 retracement level. It's 8.6 retracement level. It's 8.6 retracement level. Percent retracement level. So these are the levels that Leonardo Pisano said that the price during a retracement, that the price will, these are support and resistance zone. These things are all support and resistance zone. It says price can get to these levels and retrace and start going back and start continuing the direction. But when the price gets to its 8.6, it tells us that the market have done a deep retracement. That the market has done a deep retracement. And if the market has done a deep retracement, we're expecting that the market would have gathered momentum to do what? To initiate the buy. Would have gathered momentum. What it means is that at this point here, what it means is that at this point, when the market gets to 23.6, the market has gathered some traders. Some traders are waiting for price at 38.2 so as to engage the market for a buy. Some persons will say, okay, at 50, let me engage the market for a buy. Some persons will say at 61.8, let me engage the market for a buy. At 78.6, let me engage the market for a buy. At 88.6, let me engage the market for a buy. What it means that this market have gathered buyers from 38.2. If you engage the market at 38.2 retracement level, and the market still steep down to 50, you will be in drawdown. Now, it will gather some persons waiting at the 50% bus stop. It will take them. If the market still continue, if it has not gotten enough momentum, the market will steep down again to 61.8. Gather those people waiting at that bus stop for a buy. They will join the vehicle. If the momentum is not enough, it will still steep down to 78.6 retracement level. Gather the buyers waiting there. Now, if it is not enough, it will go down to 88.6. Gather those traders that are waiting for there for a buy. To do what? Once it has gathered, imagine the number of buyers to gather from 38.2, 50% retracement level, 61.8 retracement level, 78.6 retracement level, 88.6 retracement level. If it has gathered all these persons, the market now has potential. It has gathered enough momentum to trigger the buy. And when the market gets to 88.6 retracement, which is a deep retracement, the market, Fibonacci said, the market will move like a rocket. It will move fast to take out this high or the low, depending on where it's coming from. Okay, so traders decide to do this. By the time we implement this on our chart, you will have a better understanding. Okay, this is the retracement. Now, when this market comes here, Remember, I said from here to this place, the market have done 100%. The market have done 100%. So if this you're doing a pullback, that means you're doing a pullback here. What you're doing is that at this level, these different levels, you will have either 23.6. If the market comes here, it says the market can come to 23.6 and continue the sell. It can come to 50% of this swing. That's half of the swing, and it will continue the sell. Or it will go to 61.8 and continue the sell. Or it will go to 78.6 and continue the sell. Or it will go to 88.6 and continue the sell. By the time it has taken out this high, which is 100%, it also tells us that now the market is not longer bearish, that it is now a bullish market. So at that point, when it has taken out this high, what we'll be talking about now is the extension of this swing. We should be talking about the extension. And in extension, look at, let me give the extension, the extension levels. Now, extension levels is this. This is extension levels. We'll have, because we say this is 100, this swing is 100. By the time it gets to this point, that means it has gotten to 100. Where you have, if you chart pattern data, you'll be talking about double top. But once it takes out that double top, it tells us it is doing an extension of that swing, extension of the swing. So that means what we'll be talking about is more than 100%. So we have 1.236%. No, we don't need to do this in a retracement. Just don't worry. We'll just get these numbers and plug it on my chart. Object name is empty. Let me notice. 1.236%. We'll have another one, 1.382%. 1.382%. We have 150%. 1.50%. We have 1.618. 1.618%. We have 1.786%. Or you just follow me, we have put it somewhere. Go to my chart. 1.786%. 1.786%. Oh, what's it now? 1.786%. One 1.7786. We'll have 1.866. 886, sorry. 1.86%. We have 2.618%. We have 2.618%. 2.618%. Let's drop the other ones on the chart. Okay, so these are you can copy it. This is the retracement level, and this is the extension. So you can copy it. Then let's go to our chart, plug it on our Fibonacci, modify our Fibonacci. Then we'll start going to the chart to see what we do. So that at this point where this market is buying, this buy has almost everything. Let's see what happens. Now,
hello, sir. Which is the retracement? Which is the extension?
Retracement is this one, the one on my right, where my cursor is. On my right. Why the extension is this? The extension is 1 point, that's more than 100. The extension is less than 100. Sorry, retracement is less than 100, 3.6%, it's 8.2%, 50%, 61.8%, 78.6, and 88.6. Okay, just get it down so that we'll go to our chart. We'll go to modify our Fibonacci, then we'll go to business. Go to business. Wow, okay. Are you done now? So I want to continue. We actually don't have much time. I want to continue. So now let's go to our Fibonacci. Sorry?
Continue.
Let's go to our Fibonacci. How do you get your Fibonacci is that look at this place. This place where my cursor is. This place where my cursor is. This place where my cursor is.
Hello.
Right, sorry, please. I had to attend something. Okay. Okay, so now this is retracement, this extension. Let's go. Now look at where I want to pick my Fibonacci from. This is my Fibonacci. This is my Fibonacci. Look at it here. This cursor that have dotted line with F below is the Fibonacci icon. So you pick the Fibonacci, and drop it somewhere. Look at, let me just drop it anywhere. Now. Okay, so now when you have this, let me take it up so that we'll see it. Now, these are my Fibonacci levels. If you look, my Fibonacci levels, my Fibonacci is modified because that is what I trade with. My Fibonacci is modified, but I will teach you how to do it. When you have this your line, right-click on the line, right-click on the line. When you right-click on the line, you see Fibo properties. Fibo properties. You click on Fibo properties. When you come to Fibo properties, now you have the level and description the way we have it in our RSI. That's what we want to do now. We'll have the levels, we'll have the description. Now, your own, you have on the level, possibly on your own level, you might have 0, you may not have 23.6, you might not have 38.2, you might not have 0.5, 6, 1.8, or whatever. What you just do is that check the numbers that you have on your own, on your chart. I wish somebody that is using a laptop is with me, so that the person will be telling me, because I've updated my own already, I'll teach you how to do it. So what you need to do now, I want to plug in these numbers into this box, the way we did in RSI. I just believe all of us understood what we did during the RSI. It is the same thing we're doing here. The only difference is that RSI will have 30, 70, 20, 80, and now on the description, we started writing buy, sell, strong buy, strong sell, and all the blah, 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 blah. But here, we are not doing that. Yeah, what we're doing now is that this is 0.236. When you come here, you change it to the percentage, which is 23.6, like I did here. 23.6. Let me remove one. Let me remove one. I want to remove this. This is 0.236. I will remove it. I will delete. Look at it. Delete. I'll delete that row. It has gone out. Now I want to add that my 0.236. Look at. I'll click on the add. I'll click on the add. Wherever it is, it's not your concern. Don't worry. The system will arrange it as it should be. So what I'll do now is that I'll put 0.236, and on the description, look at what I'm doing. I didn't just, when this thing is colored like this, I start typing, it will not go. I'll click, double click so that it will be white for me to type. I'll type 23.6, 23.6. That is what I have done. I'll remove my cursor. Have you seen it now? Have you seen it? So I have my 23.6 there. If you want to put the 38.2, if in case it is not there originally on your chart, just click on add level, add, click on add. You go to your level, you click, or should I remove these things and do all of them? Because it takes us so much time. Should I remove them?
No.
Or you guys understand what I'm saying?
We understood. It's fine.
Okay. So once you go to if in as much as you've written these things down, that is what you need. Write them down somewhere. Go to your Fibonacci, open it like this. Click on a neutral space. Meanwhile, make sure that your Fibonacci is double clicked. Look at the tips. The tip must have that small box for you to modify. It must have this box for you to modify. Once you have done that, then go to Fibonacci properties. That's what you do. On this, your red line, this is my red line. I will right click. Let me go back. I will right click. Fibonacci properties. This is Fibonacci properties. I'll click on Fibonacci properties. Then I will not go to common. Don't worry. Go to Fibonacci levels. Fibonacci levels. Click on Fibonacci levels. Now check which one you have on your own chart. You might have 23.6. You don't need to type 23.6 again. You might not have a 38.2. Then you need to type 38.2. What you need to do, click on add. Click on add. Once you click on add, a box will come up like this. Look at it. A box will come up like this. Then you start typing. When you are done, you click on add again. Another box will come up. You put 50. That's on the level. On the level, put 0.50. Then the percentage is what we put in description. Percentage is what you put in description. Percentage is what you put in description. So it will be 50%. Don't get it twisted. Don't make mistake. It will be 50%. Then when you check 61.8 is not originally on your Fibonacci level. Now you click on add. On the right side, which is the level, you type 0.618. Then on description, you put the percentage, which is 61.8. The same with 78. I know you will not have 78.6, you will not have 8.6. So you need to manually put it. So what you need to do is that you go to add, click on add, a box will open. A box like this will open. Look at it, the box will open like this. You type here, for example, you type 0.786. I will remove it because I already have it there. Now you come here, you put the percentage, 78.6. That's what you need to do. I have gotten it on my chart. You've removed your hand. So I want to remove it because I already have it, so I don't get duplication. I don't get it duplicated. So I'll delete this. So anyone you don't have, you do that for your retracement and you do that for your extension. Just on this same body, type it. Look at my own extensions. Look at it. This one is 1.886. This one is 188.6. This one is 1.786. This one is 178.6. Have you seen it now? So I have modified my Fibonacci already. So you should do that on your own. If you have any challenge, let me know. But I don't think you will have a challenge if you were here in our RSI class and other classes. Okay, so once you're done with that, this is your style, is this arrow, this line, this Fibonacci line, which I said is support and resistance line. Once you have put it, if you want to change the color to red, it doesn't matter. The color doesn't do anything to us. You decide which color you want to based on the background of your chart. Now, for here, color, this red line is what I have as this red. Parameters, don't worry, don't touch anything in parameters. Visualization, leave it to all time frame. What you just need to do for us is click OK. Once you click OK, it is there on your chart. Now, I want to bring it. Now, I want to apply this. Let's show you how to apply it. Now, I have looked at this market. This market I've done a swing low. What do I want to do? I told you I want to buy this gold. I want to buy. The question is, to what extent am I buying? Now, what I will do is that I'll pull out my Fibonacci. Ordinarily, for me, I know where I am buying to. But for you, that is just a newbie. You may not know where you're buying. Fibonacci will help you. So what you do, come here, carry your Fibonacci here. Look at where I drag it from where it's coming from. I started from the high to the low. Now you will see that this market, this Fibonacci, as it's selling, as it's buying now, where if it comes to this line, this is 23.6. This is 23.6 retracement. This is 38.2 retracement. This is 50. This is 61.8. This is 78.6. Have you seen that? That's my other block tallies with 78.6 retracement level. 78.6 retracement level. So what I will do is that this market, as I am buying, I will tell myself I am buying to 7, in case I don't know what is an order block. I'll tell myself, okay, I am buying to 78.6 retracement level, or I am buying to 88.6 retracement level, and I will leave the market. I will leave the market. So what it means is that at these levels, since this market has printed a bearish move, sellers will be on these levels to do what? To sell the market. Sellers might be waiting at 38.2 to sell because to them it's a pullback. Look at the candlestick before this bullish one. The candlestick before this one went up to 38.2 retracement level and sold massively. When it was doing this, it's like this bullish candle. It has body like this bullish candle. But it got to 38.2. Sellers pushed it down. Are we together? Sellers pushed it down. So that is why I said you must wait for this candlestick to close so that you know what is happening in the market. This market can do, if this market wants to really sell, it can do 38.2 or 23.6, which Leonardo Pisano said it is not a valid replacement. It is not a valid replacement. Valid retracement start from 38.2, 50, 61.8, 78.6, 88.6, which is deep retracement. Immediately it passes this 100%. Look at the 100. Then we'll be talking about extension. Look at extension. Look at my extension number here. I'll be looking at trading this market with this extension. I don't know, is my chart clear? Hello? Can you guys see it?
Yes.
Yes, it's clear and sometimes it's blurred.
It could be network. So what I'm saying is that For me to trade this market now, just put my Fibonacci and tell myself I am buying this market up to 61.8. So what it means is that if this market comes here, let's say for example, it has started here, which is this low. Now, if this market comes somewhere around here, 61.8, I would have taken my profits selling this market, because after now, the market can continue to sell. But if I have taken my profit, nothing concerns me in the market again. You don't need to go and buy there again. You don't need to buy again at this 61.8. No, the market has given you what is called that 61.8. The market has given you, the market has passed equilibrium. Equilibrium is 50%, which is half of that swing. So the market has taken you to a premium level where you need to buy, where you need to sell. So at that point, from here, we are looking for opportunity to sell until the market has broken above this 100%, this high. Then we should be looking at buying the market. If it breaks this high and still give us opportunity to buy, then we can continue to buy. But if not, we are in for a sell. We are in for a sell. So if you are trading using Fibonacci, you can tell yourself, okay, based on what I've been saying, I want to trade 61.8 or 50% retracement. I'll leave this in like this. Let's go to another chart and look for that chart. Let's see what happens. Okay, now look at this one. This is GBP NZD. Sorry, Euro NZD. You agree with me that from here is a swing. There is no major retracement. From here to here is a swing. If you're with me, you will see it. From here to here, it is only bearish candlestick. The only bullish candlestick is this small candlesticks. It is not a valid retracement at all. So this thing is a swing. This thing is a swing. Now I want to trade now because we said the market does not move on a straight line. I have identified this swing. Now at this swing, this market has given me a rejection at my area of value. It has given a rejection, telling me that the market wants to go in for a buy. If you saw this thing 3 days ago, because this is T1, 3 days ago, let's say this one can close as a hammer, it's very, very sweet hammer. Now you should be looking for opportunity. Is it not in this our class? I said Euro NZD, we're looking for a buy. That we're expecting this market to come down a little. If it did not take out this low, then we should be in for a buy. I in this class when I thought, I think when I thought RSI or so, when I thought, even when you look at RSI, look, the market tipped to even 10, almost 10, below 20, telling you that the market is oversold. We should be looking for opportunity to buy. And look at it, the market started buying. The market started buying. So now, let me say I want to buy this market. I saw this thing and I want to buy. I'll just pick my Fibonacci. From this swing, I'll just drag it down to this place. The week, I'll leave it. Now, you will see that this market have, this retracement have done 23.6 retracement. It is going to 38.2. It could go to 50. It could go to 61.8. Look at 61.8, tallied with 200 period moving average. If you're trading moving average, 61.8, which is a golden ratio. Leonardo Pisano said it is a golden ratio. It is called a golden ratio because even nature supports this number. It's called a golden ratio because even nature, it has something to do with nature. It has something to do with nature. I'll tell you one. If as a man, as a human being, any kind of human being at all, once you measure from your waist to your knee, hello, are we together? Once you measure as a human being, as any kind of human being at all, any kind of human being, whether somebody that has stunted growth, somebody that does not have, somebody that is normal.
Hello?
Yes. Once you measure from your waist, to your knee, your waist to your knee is 2 times your body. Once you measure, this is what I'm saying has nothing to do with your chart. But I'm just telling you why we say it is a golden ratio, because it has something to do with nature. It has something to do with nature. It has something to do with everyday life. Everyday life. Even in science, it has something to do with science. So that is why it is called a golden ratio. Most persons that trade Fibonacci trade using, in fact, they use 61.8 retracement level. Most traders use 61.8 retracement level. But you can decide, okay, let me take 50 retracement level. Those people that gives you signal, that sends signal, all those short scalping signal, you will see that what they do is that once they've seen a reversal candle at their area of value, what they will do is that they will initiate the buy and tell you buy. The market is buying. They want to buy to 23.6 replacement level. Then they will tell you close your trade. You that does not know, when they send the signal, you come to meet the signal 10 minutes, 5 minutes after the signal is given. You engage your market for a buy. You enter the buy, the market starts selling subsequently. You said, this thing is not working. But the man that gave you that signal had cashed out his money because he's looking for very short pips. If you look at it, once this thing has done this, from this low, they'll just give a signal to a 3.6 replacement. Look at it. This is 417 pips for crying out loud. But this is D1. I know they don't come to D1. They go to smaller time frame, like 15 minutes, like 5 minutes to give you those your buy. Those your signals. They don't come to daily time frame because daily time frame will take you so much time. They go to 5 minutes, 15 minutes. Now within 15 minutes, just one 15 minutes candle, they are out of the market. Meanwhile, you may have seen that signal 10 minutes before the time. As you enter, you're waiting for $1 with a small account. For the market to give you 10 pips, those guys have collected with a huge capital. They've knocked the trade with one standard lot or two standard lots. Only a small push, they go out of the market. You remain waiting for $1. You stay where you're waiting for $1. The market will retrace and collect even your $3. You start complaining. That is why we say UTB at Trading Academy, we expose all of these things to you so that you can generate signals for yourself. Even if somebody should send this signal, it's just an eye-opener. But you can actually sit down, analyze the chart, and enter the market at will, not under the influence of anybody. You can enter at will. That is why we're taking our time to teach you all of this, teach you different strategies so that you decide to trade anyone you want to trade. Because even when you see this market can do 38.2 retracement and start selling. If you remember what I've always been saying about a handshake or a void, I will always tell you that, see this market that is pushing like this market is coming to have a handshake with this, thereby filling this void. This market will fill this void. It happened. Look at it in Euro JPY. Euro JPY. Look at it here. When I gave this signal, when this market started selling, look at my order block. I drew this order block even before this market break this low. I was waiting for this order block. The market touched the order block and rejected, and got rejected fiercely. Engage this market for a buy. I know that this market that has been engaged for a buy is coming at least to fill this void. At least to fill this void. The market filled the void and even started going further. But even if you understand how to trade, at least this void, you can't take everything in the market. That's the simple truth. You cannot take everything in the market. Take the one that is your own. If you look at this void, okay, my bias is that, okay, to come and fill this void, if you want to continue selling, you continue selling. If it doesn't want, you continue the buy. I would have taken this point from here, from this low. Let me say, okay, this candlestick, I allow it to close. Let me say from here to this point is 163 pips, which I know the market will come and fill. This thing is happening in Euro JPY. Look at it in Euro Chef. Look at it in Euro Chef. This is another one in Euro Chef. I drew this thing. Look at this line. I drew this thing like almost 2 weeks ago. And I look at it here and I look, this market came here. This market came here. I told them this market will come to this point. I didn't meet this market early. I didn't meet this market. I told my colleague yesterday that that's why I do this thing here. That's after this candlestick. I was expecting this one or this candlestick yesterday to come back to this point. I was in lower time frame to come back to this point. I went to H1. I said I've missed the market. But I wanted this market to come here and touch this place. I had a pending order for a buy here. But unfortunately, look at this market came here, did not trigger my buy. If not, I would have been in this massive profit. It did not trigger my buy, but I don't like chasing the price. I allowed it to go. It is not my own, it's not my own. Because where I knew is that this market is expected to come here, touch it, but look at where the market came to have a handshake. The market came here to have a handshake with this man, and he continued his movement to the village square. So he had a handshake with the elders. Look at where he had a handshake with the elders. I didn't notice that. I expected the market to come down to this point. And at this line, that is where I put my pending order for a buy. In fact, I did a buy limit. Took this low as my stop loss. And my take profit was supposed to be here. By now, this market would have given me my take profit with ease. Just like today, I would have taken out my profit. But be it as it is, there's no problem. Tomorrow is another day. We don't get angry when we miss an opportunity. It's just for you to be disciplined and know what you're doing. My analysis was that this market will come and touch this, then trigger my buy, then we move together. But it did not trigger my buy, no problem. I came and saw that the market has started buying. I cannot chase the price. I don't have a parachute. I decided to stay where I am. The market left me. No problem. Tomorrow is another day. I'll buy card JPY. Card JPY. Buy card JPY. Card JPY. Look at my entry here. I've locked my entry. Look at my big profits here, somewhere around here. So I'm expecting the market to come and see what it do. If it does not, I've seen this one came down. If it does not take out this, then I will need to leave the market. If it did not take out this high now, I will leave the market before the close of the market. But if not, I will just carry my stop loss and put it here. Let me just put it at first. I just put my stop loss there. Whatever the market wants to do. If it comes back to take my stop loss before I wake up in the morning, so be it. If not, then we are in a good ride in this market. Okay, so that is it for card JPY. I entered card JPY. I entered GBPNZ also, but GBPNZ has been doing what it means. Only God knows what GBPNZ has been doing. I'm waiting for it. I'm looking at my profit somewhere around here. So I'm waiting for it to do what it wants to do. GBP Ox 2, I am in for the buy. So that is it. Okay. All right. So let's get another one where we need to draw our Fibonacci. That's what we're studying. We're not doing analysis. Okay. Now look at this. Look at this market. This market, I told you this market is a confirmed bearish market. But actually, what this buy is doing now is just a pullback. The buy is doing a pullback. When this market is doing a pullback because of the news for JPY. JPY, their trade balance was bad. Their trade balance was bad, and that is why this market is doing this pullback. Remember, is it weekend analysis? I told you that we're expecting a buy to this neckline. Weekend analysis, I said it, that I'm expecting a buy to this. Look, if I look at it now, look at where I draw this my line. I said I'm expecting a buy to this level. Once it gets to this level, then we should engage the sell. Now, look at it. This market have done this swing. Look at the swing. Look at the swing. The swing is from here to this place. That's the swing. Now, what will I do? Let me get my Fibonacci. I'll get my Fibonacci. I'll drag my Fibonacci from here to this point. Look at it. I'm expecting this market to come and do at least 38.2 retracements or 50 retracements. Then the market will continue the sell. And it will continue the sell to this other block. It will continue the sell to this other block. I have done this analysis, and I told you that if we're in the weekend analysis, I told you that this market is going to do an M. So even if you are on this market, keep an eye on this market. You can draw your Fibonacci. Once you get to 50% retracement level, or even 38.2, which is this line, the neckline I have drawn. If you see anything that gives you a signal for the sell, please engage the market for the sell, because the market is coming to have a handshake with this. And this is a native level. That is why I'm very sure it's a native level. This is a native level that the price is coming to touch. It's coming to touch this native. This is the daily time frame. It's coming to touch the low of the months. This is a monthly time frame. The low of March 1st. That is where the price is coming to. By the time it touches the low of March 1st, then we'll see a bearish run to that downside. Because I told my colleagues that by tomorrow, I'm expecting a buy of JPY. And if that is correct, then this market will complete the narrative, it will complete what it wants to do. Tomorrow is Thursday. I remember I've always told you that reversal, of course, Wednesday, Thursday, Friday. So this market has started buying since Monday. Okay, Tuesday, Wednesday it has bought. It did a little sell Monday. Tuesday, Wednesday it has bought. So it will do a reversal by Thursday, Friday, hopefully. So if we see what happens, then we'll be engaging this market for a sell. We'll engage the market for a sell. I've started giving you signals. We're teaching and we're giving signals based on current price. Okay, so that's Fibonacci. I want to see another one. Okay, now look at it. Look at another one here. This is Fibonacci. Good, let's use this as a case study. Now, this Fibonacci, this is a swing. This is a swing. I told you must identify a swing. This is a swing. This is a retracement. This is a retracement. This is a retracement. Now, on this retracement, we now go on. This is an extension. This is an extension of this swing. Good. So if this be, let's use this as a case study. Now, I want to, let's say this one has not formed. Remember, you're trading before the market formed. By the time you see this swing, and now remember at your area of value, once you see that support, that's why I said if you don't know how to trade support and resistance, my brother and sister, it will be very difficult for you to trade anything in this market. Once you have drawn your support and resistance, we're saying when this market started buying, look at the resistance. Now the market started falling. At this point, when you see this, you want to sell. The question is, to what extent will I sell? To what extent will I sell? I would have put my Fibonacci like this. Look at this one is a buy, and I'm taking it from the low. My Fibonacci up to this point. Now, this market did what? This market did 61.8 retracement level. Well, let me push it so that you see it clearly. This market did 61.8 retracement level. Look at it. 61.8 retracement level, which is the golden ratio before it started the buy. Before it started the buy. This market started the buy. As long as it did this, the market went back, got to this point, which is 100%, then the market started moving up. Now, if I want to trade the extension, what will I do? If I want to trade the extension, I'll pin my Fibonacci. This place, this pullback, that is what I want to use as my extension. I will take it this way, extension. Look at this market did an extension of 261.8 retracement level, extension of the previous swing. So that means this swing is actually longer than the previous swing. So it tells me that this market, but I may not stop 261.8% retracement. If you understand trading with your support and resistance, you know where to buy, where to sell. If I am engaging this market, I actually do not use more of Fibonacci because I know what I am trading. I can trade with a naked chart. I don't have anything on my chart. Most times I put these things just for confirmation of what I am saying. I can comfortably trade a naked chart and trade it very well. I know where I am buying, where I am selling. I know to what extent perhaps the market will get to. If I was buying this, I know I will buy up to 161.8% retracement and I will go out of the market. Look at 161.8 retracement. It tallied with this, my horizontal line, which is my resistance line. It got to this point. Now, when it break above, what it is, the market did not give me opportunity for a to engage the buy. I would have allowed it. If it goes, no problem. But if it doesn't, then I can lock my entry and follow the market, continue what it's doing. So what I have just taught is an extension, and we have done retracement. Now look at another extension again. This is a bullish extension and retracement level. Let me go to a bearish one. So that look at the bearish. This is a swing. This is a swing. There is no major retracement here, no major retracement. Now from here to here, where I drew this is my swing. Look at the pullback. That's tell you that we trade these things even before we tell you we trade them. As we're teaching you what we trade. We're not teaching you a different thing. Now this is what's it called? A swing from here to this point is a swing for me. The swing. So now, when this thing has gotten to this swing, I'll be waiting for a retracement. I'll be waiting for a retracement at this point. I'll be waiting for a retracement. Now, what am I looking at? Well, to what extent will this market buy? Which is a pullback. To what extent will it buy before it continue the extension? Look at the extension. Extension is that the market did this, came back and did this swing down. So that's the extension. Because extension is that it took out this low, the previous low. Look at the previous low, took out the previous low. So anything which is different from the low, look at where I do this line. From here to here is the extension. Now look at it. Let me get my Fibonacci and do the retracement. I'll take my Fibonacci from here. Look at this. So you guys see. From the high to the low. Because it's bearish market. Now this market did 50% retracement. Have you seen it now? This market did 50% retracement. 50% retracement. You can decide, because the market most times, if it's a market that wants to do retracement, it must at least to a great extent, like 70% assurance that it will do that 8.2. Why not say I want to trade this kind of this because it's a pullback, it's a counter trend. I want to trade shorts at 8.2. And that would make you to even increase your lot size a little so that you grab what somebody that's waiting for 61.8, the lower lot size, will still get. So this market did 50% retracement before it started continuing the extension. And if I want to trade the extension, I will come here, take my Fibonacci. This retracement, that is where I will draw my Fibonacci. Because this retracement is a buy, is a bullish swing. I said, draw it from where it is coming from. So it's coming from this low. I want to do extension. Look at the extension. This market did what extension? This market did 127.2 extension level. 127.2 extension. That is what this market did before it continues the movement. Question. I know there will be question. Let's allow you. Question. Ask me. Let's go. I'm done with Fibonacci. So ask me your question.
So at this point, you are calling this, excuse me, swing. What makes it a swing?
What makes it a swing? I said a swing is a movement of price without an obvious retracement. A swing is a movement. Look at this. What can you see here? Is it not bearish candlesticks? Hello?
Yes, that's what I'm saying.
Good. So these bearish candlesticks you're seeing here tells you there are, when we say swing, if the market is selling, a swing is that there will be a bullish candlestick that will do at least, according to Leonardo Pisano, who is the founder of Fibonacci, he said at least that's 8.2. That is when you know that the market has done a valid retracement. The market has done a valid retracement. It has done 38.2. If it does not do 38.2, if it does 23.6, it is not a valid retracement. So that thing continues with the swing. You will see that this is a bullish market. But when you do this swing, this thing did not amount to 38.2. So it is not a retracement. So this thing is a swing. From here to here is a swing, which means a movement of price without an obvious retracement. Did that answer your question? Okay, now look at that thing I will show you. Look at what? Look at what I will show you. That thing I drew, look at it. When I did it in D1, look at it. We got confused when we saw bullish candlesticks. Now look at it in weekly. There is no bullish candlestick. They're all bearish candlesticks throughout. They're all bearish candlesticks. They're all bearish candlesticks. Have you seen it? So there is no swing. There's no retracement. Look at where there is retracement here now. Look at this bullish candlestick. So market took it up. And I have told you that this market did 50% retracement level before it continued to this extension. The market did a 50% retracement level. So this is a valid retracement. We cannot say, I cannot come and tell you that from here to here is a swing. No, because of this retracement, the swing ended here and the market moved up. The 50% retracement before it continues the sell. Is that clear?
Yes, sir.
Okay, question, please. Question.
Hello, sir.
Okay. Yes, ask.
Hello.
I can hear you, sir.
Okay. Me, please, I just need more explanation on the extension.
Extension. Extension, what I mean by extension? Look at this. This market did, you remember this thing you learned? This thing you learned in your basic class. The market did a swing up, a pullback. It's the same thing we're doing here. Now, came back again. First, as it's moving, first it will come to this point. Is that correct? Are you with me? Hello? Hello?
Yeah. Yes.
Yes. You ask the question and you're not looking. What I'm saying is that this market did a swing up here, did a pullback. Now it's going back. Now, two things is that it might come here, and the next thing is that you will see this market coming down like this. Do you understand? But if the market does not come down like this, you see that this market that came here will create a longer one that will take out this high. From here to this point is the extension. You see, from this point up, from this place I have drawn, from the last low, from the last high to the current high is called an extension. From here to here is extension of this swing. Of this swing is an extension of this swing. Is that taken? Hello?
Hello.
Huh?
I can hear you.
No, not whether you can hear me. Do you understand me?
Yeah, I understand, but I don't know if it's my network. It's not loading here, but I'm getting what you're saying.
That network, I need it to load
Hello?
so that you can understand what I'm saying clearly, both on chat and in my voice, with my voice. As the chat loaded now, NZDJPY, is it loaded on your chat? On your screen?
No, the chat is there. I mean, the one you drew yourself. I don't know.
One on what?
When the one you drew yourself.
This one now, are you not seeing it?
Where you are moving your mouse. I don't know where the line ends, because at the point
Look at this line from
on.
here, look. It started from here to this high. No, you'll be seeing high now. You see high. You did this in basic now. You see high. This is a high that's created. Even when I did divergence, I gave this thing also.
Okay.
What's the problem when some of us miss class? It's coming back, it becomes a problem. I said this is a high. I don't know if it is his network that we're talking about, or that he's not hearing me, or that he doesn't understand which one is a high. That's why I'm having challenge now.
I can hear you. I can hear you, but what you're drawing is really loading here. That's what I'm saying.
Can you see it now? Are you seeing my mouse? Are you seeing my mouse?
Okay, I'm seeing where the mouse is.
Are you seeing that line?
I'm not seeing any line. I don't know which line you're talking about.
This straight line I've just drawn now, you're not seeing it.
Can I go out and join the meeting back? Maybe it will
No
load.
problem. I'm here to welcome you.
Okay, let me just try it.
Let's be fast about that.
Okay.
Let's give you 1 minute. If you have other questions, if anybody have any questions again, let's be taking the question while he comes.
Okay, sir. I have a question, sir.
All right, ask.
Okay. My question was when you said when you draw the Fibonacci retracement tool, and you said the golden point is 61.8.
Golden ratio.
Golden ratio rather is 61.8. Now, what do you mean by golden ratio? Is it that it's a point where one can enter the market, or is a point where one can exit the market?
Truth is, it's either what you have said now. It's either if you start buying. I gave you example with gold. This is gold. I said if you start the buy from here, that means you are buying to 61.8. You exit the market. But if gold is a selling market, when it gets to 61.8, it has created a lower high where the market will sell. So some sellers will be waiting at 61.8 to sell. In this market, we are doing two things. We are buying and selling. So while you're buying, some persons are selling. While you're selling, some persons are buying. So once you are buying from here now to 61.8, you will come down from that vehicle if you are in a public vehicle.
Okay.
Signing me.
Okay, I'm back.
Okay. So what I'm saying is that if you are in this market, Dan, I'm coming to you. If you are in this market, 61.8, if you're buying, you buy to 61.8 and leave the market. Some places are at 61.8 to sell because the market has given them a lower high, which is a criteria for a sell. The market has given them a lower high. Some persons are here waiting to sell. Let me give an example so that we understand this thing clearly. If you are in a public transport, either a bus or a taxi, now you enter the taxi at a bus stop. You enter. You get to your own bus stop, you will come down. As you're coming down, some persons are at that bus stop waiting to enter that vehicle. So as you come down, somebody will enter. So that is what is happening in this market. As you come down from the highlight from the vehicle, somebody is taking your position. Somebody is entering that vehicle to sit down and follow the vehicle to the direction. Why some people are coming down from that vehicle, then some persons are entering the vehicle, either going in opposite direction or going in your direction. Because at this point where you enter from here, you have taken out your profit from the market. You have sold. At that point where you take TP, take profit at 61.8, whatever price it is, you have highlighted from that vehicle. Somebody that is looking at this vehicle will say, this market will buy you. Let me enter at 61.8, but the person is making a mistake. He's not supposed to do that. He's even supposed to sell. Some persons will enter here at 61.8 to sell at that price. So once you are highlighting from the vehicle, somebody is entering that vehicle to do a different direction to sell that market. That's why I told you that 61.8 or any of the ratios, any of the levels, people are there to buy or sell. But if you start from the beginning, from this flow here, that means you are buying to 61.8 and you're leaving the market. Then people that want to sell will enter at 61.8 and start selling so that the market will create a lower low. That is to tell you that the market is bearish. Is that clear? Mr. Okiri? Sorry?
I said the retracement. That's what you're explaining to me.
Who is talking? Let me know who is talking. Others should mute their mic.
I said
Zoom user, are you the one talking? Hello? Okay, I thought you're the one talking.
No. You've answered my question. It's a Zoom user. I think he didn't know that the mic is on.
He's discussing with someone else. Okay,
Hello,
Dan,
sir.
let me answer your own question.
Yeah.
What I'm saying is that, let me go back to which pair is that?
The retracement. Sorry, the extension.
Is it? Yes. There's a pair I want to use to do the extension. Which pair were we looking at? Okay, let's look at this now. Let's look at this. Okay, thank you. Let's look at this now. This is a bullish market. If you see this market now, from here to here, oh shit. From here to here to here is a swing. From here to this point is a swing. Now, this is a pullback. This is a pullback. And this is now another swing. Still continuation, but it's an extension. It's an extension of this swing. I will give you an example. I say, if you remember what you learned in basic, the market does a swing like this. The market does a pullback, and the market will continue with a swing up to take out this high. At the point where price has taken out this high, this previous high, this high here, is a high. By the time price has taken out this high, this is a high. Now price has created a new high, high 2. Price has created a new high here. Price has created a new high here. So this high from the previous high to this other high is called an extension of this high. That's what we're saying, an extension of this high. So Fibonacci will help you to know those levels of which is just like the retracement, those levels at which you can take your high and take your profits or enter the market for the high. Look at it. Let me take off this so that you can see well. Now, this is a swing. I'll put my Fibonacci. Let me see the retracement. What level did it take us to? This is a swing. Now, the retracement took us to 61.8. If you can see it, look at it here. This is 61.8 retracement level. So this retracement is valid. This retracement is valid. So now, since this retracement, now after that, because I told this guy, the person that asked me the question, I say, if I am selling this market from this high, I will sell to 61.8 or to 50% retracement level. I will go out of the market. I've taken my profit. Now, since it is a bullish market, you know you are not selling for too long because very soon the market will start buying. Very soon the market will start buying. So you're not selling for too much, for too long. So that is why Fibonacci will tell you the levels to which you can sell. You see that you're selling at 38.2. You see that you're selling at 50. You see that you're selling at 61.8. So when it gets to that point, you're looking at what is candlestick doing because those levels are support and resistance level. Then after that, the market start buying. Now you should engage your buy. How do you engage your buy? This thing that you call a pullback, that is where you measure. It's coming from a high, which is a sell. Measure it like this to get your attention. Now this market did over 200% extension, 200% extension of the pre. So this is the extension. You can say, okay, when I am buying here, I want to buy to 161.8, which is the golden ratio. I want to buy to 161.8. Fibonacci will tell you where it's 161.8. At this point, you trace it and get your your value. Like, look at it. If I come here now, 61.8 retracement, look at it. The value is 1.68373. That is where I'll put as my take profit while buying this market, Euro NZD. If I was in this market, I'll put at 1.68399 as my take profit, which corresponded with 161.8 retracement level as an extension. If it continues to buy, no problem. If it does not, no wahala. But the market has given you something, has blessed you for that day. Because if you buy this market here from here to 161.8 retracement, 161.8 retracement is about 360 pips. How many of you will remain there in 360 pips? So that is the extension. Hope we've done justice to Fibonacci this night, because from Friday, you guys will start chart pattern. You'll start chart pattern.
Okay. Can I ask one more question?
Yes, ask.
Like you said, using the Fibonacci. Now, you said when it gets to 38.2, that is a valid retracement. Yes. And now you think if we are using the Fibonacci, after we've drawn it, we'll be looking at either buying or selling to like 61%.
Yes.
The 61.8%. But
yes.
Now what I want to ask is, based on the market and the way it is, the interest might not be much and it depends. So if we draw the Fibonacci now, and we are,
you said the what?
If we draw the Fibonacci, I said it might depend on the movement. Sometimes it might not go as fast we think it will go, but we don't know, we don't have the market in our hands. We don't know the way it goes. So, but if we draw the Fibonacci now, then we are looking at buying at that 61.8%, 61.8%, and then it only makes a retracement to that 38.2, and then starts back to the direction it has been doing. So in that regard, we are looking at 61.8, but now the market didn't even get there with the with the Fibonacci withdrawn. So what then do we do?
Okay, remember I told you that these levels that Leonardo Pisano said, they are all support and resistance level. Is that correct? Did you hear that?
No. Come again, please.
I said those levels, 38.2, 50%, 61.8, 78.6, 88.6, they are all support and resistance levels. Are you with me?
Yes.
They are all support and resistance level. So what you do is that if you see the market at 38.2, it got to 38.2, you are looking at candlestick. Does the market still have the potential to continue to buy? It does not mean that if I say 61.8, I must be there in 61.8. No. If I have seen candlestick pattern telling me that, see, we don't have strength to continue to buy, why wouldn't I take my profit, for crying out loud? In fact, the truth of the matter is that for me, once the market moves, I'll lock my profit. Do you understand me? Why am I locking the profit?
Yes.
Because I know that the market is not my own. It can come back and take me out, even take me at my stop loss. So let me lock it so that if it comes there, it will close me at either equilibrium or with more profit. So I am not saying the market must reach 61.8. If not, use your hand and drag it. No, that's not what I'm saying. What we say is that, okay, possibly this market might get to 61.8. If it gets to 38.2 and we start seeing candlestick telling us that we cannot continue the buy, bros, take your profit and leave. But if after 38.2, the market, you still see that the market have the potential to continue the buy, brother, remain in that market until you get to where you are satisfied, 61.8 retracement level. just like when you enter a vehicle,
Okay.
a public vehicle, you see that that vehicle is not good. The vehicle does not have the potential to move to your destination where you want to stop, your bus stop. Will you sit down in that vehicle and say, okay, you must drive this vehicle? You're saying that the vehicle is doing push and start. When the man match brake, apply brake, the vehicle will stop. And you see where you're going to is very far. You tell the man, okay, this is you're doing, you must move this vehicle to that destination. I don't know how you want to do it. The man is telling you that he's not even sure if he will reach the next bus stop. That with the way this thing is happening, there is fuel pump issue, that this vehicle will not get to the next bus stop. And your own is like the next 5 bus stop. You tell the man, I must sit in this vehicle, you must carry me. No, you do what? You alight from the vehicle. You alight from the vehicle. If you want to take, okay, give me my balance, let me go. If he doesn't want to give you the balance, you leave him and go where you're going to. That's the same thing we do in this market. These are bus stops. Those support and resistance level, they are all bus stops. So once you get to a bus stop, you see that price does not have the power to continue. Bros, in as much as you're in profit, look, people know me. My slogan is, you cannot go broke by collecting profit, even if it is $1 every day. You cannot go broke. So why my colleagues will say, let me put it at break even. I tell you, I don't put at break even, I put at $1. So that at least that suffer that I've suffered, if the market come back, it will leave $1 for me and not breaking, not closing me at 0 naira or $0. It doesn't make sense. So once you see that the market at 8.2 cannot go to 50 or 61.8, bros, collect your profit and leave. But if it gets the potential to continue, bros, continue your ride and enjoy yourself.
Okay, so about how do we lock profit? Yeah, it's making sense. But how do we lock profit?
I thought I showed you.
No.
Look at this my trade now. Look at my entry. Have you seen this entry here?
Yes.
Have you seen this line?
Yes.
This is where I entered the market. If you use this is where I entered the market, you see a line. That's where I entered the market. Now the market have given me this profit. Do you understand? Now I look at where the price is. Now this is the price now. Look at where I've locked. This thing formerly was here as my stop loss, somewhere around here as my stop loss. But as the market has given me profit, I didn't just leave this thing here. I moved it to this point to lock my profit. So I've locked from here to here. Anything that this market is doing is concerned. If it comes back, look at where to take my trade, to take me out of the market here. I have secured from here to here. So I can go and sleep and leave this market because the market is secured.
No, what I'm asking, hello?
Yes.
What I'm asking is, like you said, you've made the profit. Like, how do we lock it? Is it by modifying the
stop loss? The lock is not with padlock.
The trade.
Yes, it's by modifying the stop loss.
Okay. Because
it's by taking your stop loss above your entry. Hello.
I get now.
It's by taking your stop loss above your entry. That's saying you've locked it. The market cannot come back to your entry and take your money.
Sir, hello, sir.
But
I thought they said the stop loss should be below your entry if you are buying.
That is when you have just entered the market.
Okay.
That is when you have just entered the market.
Okay.
If you have entered the market and the market start giving you profit, for you to lock your profit, your stop loss should be above your entry.
Sir, please, I'm confused.
Listen, look at the chart. Look at the chart. I've said this. It seems you weren't looking. Look at the chart. Look at my entry here. This is my entry, is it not?
Yes.
Huh?
Yes, sir.
Now, by the time I entered this market, look at my stop loss. My stop loss was here. This is where my stop loss was, below my entry.
Entry, yeah.
But this market has given me profit. I cannot just leave it like that, man. That means I'm exposing my trade. So in as much as it has given me profit, I will drag my stop loss. Stop loss is, you know what is stop loss? Stop loss is, please, in case I'm losing money, take me out of this market. This is what I'm willing to lose. Is it not? Nobody's talking.
Yes, we are understanding.
That is stop loss. So what I will do now, since this market has given me profit, what I will tell the market is the system is, please, I have made profit, lock this profit for me at this point. So that when the market comes back and come to this point, it will close my trade. It will not touch my profit.
And your
percentage of my profit.
Okay, so which point did you drag it to now?
I drag it to points that I want, anywhere that I want, that I think is good for me.
Okay.
And so you will decide where you drag your own.
Okay.
Do you understand?
Okay.
Like
so,
me, I drag it
this is a buying market now. This one,
yes.
Abi. So if it's a selling market now, you know the stop loss has to be upward. So if you want to lock, then you have to drag it down.
You bring it below your entry.
Okay.
Do you understand? You bring that, just drag your stop loss below your entry. If you're using a phone, you cannot do that. You cannot drag it. So what you need to do in your phone is that you go and modify. You look for, like now, where I put it now is 90.225. You go to your phone and modify. Put it stop loss 90.225. It will take it from that up to below your entry.
Sir, because why I was asking this thing, the only thing I thought, because at first I thought modifying the trade is only maybe like, I can maybe if I sell or I buy, I can just modify to where I'm selling to or to where I'm buying to. I never knew that can be done with the stop loss. I thought once you set your stop loss, you've set it already, you can't change it. Because sometimes using my demo account, if I carry out a trade, I said, because sometimes when I use the demo account to carry out a trade, but by the time I just, get busy, it might have moved, because I'm even using the 0.01 lot size, and it might have moved to some extent that I would have, when I check it, I would have seen that, okay, it has given me like $5 and some cents there, but I will still leave it like based on it has not reached the target. Only for me to come back and check, it will have dropped down. Sometimes it might even go back to my stop loss, and that's the end.
So at that point in time, at least you've learned something. Take that your stop loss, drag it to your above your entry, or you drag it to your entry, a little above your entry. That's what they call break even. That's what they call break even. It means that market you have broken even. There is nothing in this world that will make you be in loss in that market. Even if the market is selling back to your entry, you will never be in loss. What it will just do is that it will just take you out at that's your entry price. So it is equilibrium. That's break even. But for me, I said put it even if it's $1 above your entry, $1, so that the price comes, it will close you at that $1 and leave your $1 in your account.
Okay, so placing it above your end, that is what is called break even, Abi.
Break even is putting it at your entry. At your entry, that's break even. Break even is putting it at your entry. Like for example, I entered at 100 naira. I entered at 100 naira, and the market moved to 120 naira. I've made 20 naira. So instead of putting it at collecting the 120 naira, I decided to go and put my stop loss at 100 naira. It means that is break even. If the market comes back, I will not be in loss, I will not be in profit. The market will close without loss or no profit, no win, no gain.
Let me understand. When you enter at 100 naira, you still have to put your stop loss at that 100 naira. Is that what you're saying?
When you enter at 100 naira, if you're just entering the market has not moved. You're just entering the market. When you enter at 100 naira, you put your stop loss at 80 naira.
Okay.
So that when the price has moved from 100 naira to 120 naira, you can move there your stop loss from 80 naira to 100 naira.
Okay. That's if you are buying, ba?
If you're buying, yes.
Okay.
If you're selling, the price is at 100 naira. You put your stop loss at 120 naira. So when the price moves from 100 naira to 80 naira, you move that your stop loss from 120 to 100 naira.
Okay.
I hope this one helps.
This is what is called break even, right?
Yeah, that's break even. Okay. But if you put it at 101 naira, that means it is not break even. You have made 1 naira profit.
Okay.
Is that clear, or I've confused you?
It's clear. It's clear. I'll try it tomorrow on my demo account.
Yeah, so just drag. Are you using laptop or phone?
I'm using phone.
If you're using phone, you cannot drag. It's only laptop that you can. You saw that I was dragging. I drag and drop.
So on phone,
but if you're using laptop, if you're using phone, you do modify.
Where will I see that modify?
What you do, you on that your trade, you long press it hard. On that your trade, you don't use your hand. If you touch screen now, just press on that your trade or your terminal, press on the trade. You will see options will come. You will see modify. Click on modify. When you go to modify, it will take you to as if you want to place a new trade. Do you understand me?
Okay. I'll try it tomorrow, sir.
Do you have a running trade on your phone?
Do I have what?
You have a running trade on your phone.
I don't understand what you mean by running trade, sir.
Do you have any trade on your phone?
I have one.
Any trade when they go on?
I don't have.
Huh?
I don't have.
You don't have. I've shown you. I can't use. For me to log in now, it's almost 10 o'clock. This 10:30. Log in now and show you this. Okay.
So this break even is different from locking your entry, Abi?
It's the same thing as locking your entry now.
Okay, it's the same thing.
Sir,
I think your entry, yes.
I don't know if it depends on the MetaTrader she might be using, because I think only MT5 will do that. I don't know if MT4 will do that.
MT4 will do what?
Like modifying the trade.
Yes, the MT4 does it now.
Okay. Because for the MT5, if the trade has been executed already, where I just go to is I just go to that arrow where I can see how much how the profits I'm making. Then I just swipe it to the left. It brings out those options.
Good.
Swipe it to the left. It brings out that shows like a pencil.
Yes. That's how to do it. Wait, let me see if I can log in and show us how to do it. We're actually cheating so much that it's for you guys to learn it. It's more important. Let me see if I can log in my laptop, my phone. Let me give.
Okay, so I have a running trade on my phone.
You have a running trade?
Yes, sir. I have a running trade.
Okay, don't worry. So let me just do it fast so that all of us see it. Okay, let me share my screen. I'll soon start sharing screen. After sharing screen. Okay, let me stop this first. This is my screen. Let me go to WhatsApp. Let me go to. Okay, now look at trade. This is my trade now. This is a running trade now. Yeah? Hello, can you hear me?
Yes.
Hello.
Yes,
people should watch now. Let me go and. Huh?
Yes,
you can hear you, sir. You can hear you,
Okay, this is
sir.
a running trade. What he was saying is that you swipe to the right, something like this. You see something like this, or you can long press on that your DC. You will see, have you seen now? Have you seen modify?
Okay,
have you seen modify?
Okay.
Then you click on modify order. When you modify order, now look, I didn't put take profit and stop loss on this account. Do you understand?
Okay.
Now, what I'll just do now, for me to secure it, okay, let me go back to my trade. Let me go back to the trade. I'll show you. Okay, now this is chart. Okay, now this is Euro GBP. Yeah? Now, what I'll do now is that this is my entry. I'll say, okay, look at my entry. Can you see my entry now? You see that line, right? You see that line?
Which line, sir?
You'll see the line. Now the line. Look at the line. If you look at my screen, you'll see the line. Line on top where you see the buy 0.11. Have you not seen it?
Yeah, we are seeing it.
Now, what I will do now is that if I will take my cross share, I'll take it up above that my line. I will get the price above. Now, I want to take this price. This is 0.833. Okay, 0. Look at the white one, 0.83808. 83808. I'll come here, 0.83808. On my stop loss, I'll put 0.83808. You see modify. Have you seen modify down?
Yes.
I'll click on modify. If I click on modify now, I have locked this entry. I've locked this trade. Now go back. You see the red line. Have you seen the red line now? Have you seen the red line?
Yes.
Yes. The red line now tells me that this is a buy. I'm buying Euro GBP. Now I have locked my entry. Ordinarily, this stop loss should be below, but since it has given me profit, you see that sell now will come and be depleting my profit. So I've just told you that when it gets to that point, it should close me or close my trade and leave my profit. So from the distance for that stop loss to that entry is what I have locked. If it is $20, I've locked it. If it's $30, I've locked it. If it's $10, I have locked it. So even Satan knows that even if somebody should thief this my phone or my phone fell into the water, that money is in the account, confirmed. That is what it means to lock your profit.
Sir, please come again, please, sir. Please.
Oh,
sorry.
You guys should be listening now. When you come to class like this, don't get distracted. This is 2 hours class, and this is supposed to be 1 hour 30 minutes. We're spending almost 2 hours.
Sorry, sir.
I said if you want to do anything, press your chart. Just press on that entry. That's your trade. Just press it. If you have 2 or 3, any one of them you want to modify, press it. You will see something like close order. If I want to close this trade now, I just click on close order to close. If I want to modify the charts, modify the order, I will come to modify. Now I want to remove this stop loss now, so I'll put it again. I'll click on modify. Now, when I go to the chart, you see that it will no longer be there. Look at my entry. This is my entry. There is no stop loss. There's no take profit in this account. There's no take profit. There's no stop loss. I did it on purpose because I was monitoring something. I didn't put the stop loss because the market was giving me a little drawdown then. But I knew it was a buying market. If you're following me, I've always said Euro GBP is a buying market. So I just allowed it. Now the market gave me profit. When the market was there, this profit would have been almost $60. Almost $60. But if you look now, it's playing around $39, $40, $39, $40. So what I'll do now is that because I still believe that this market will buy, what I'll just do now is that I will come back and put my stop loss. I will drag my stop loss up. If the stop loss was to be down, I'll just drag it up. And how I will drag it up is that I will take my cross share. I'll take my cross share. My cross share is out. I'll take my cross share. Now I'll go to a place above my entry. Above my entry. If I put it at my entry here, this entry price, that means I have locked at break even. I have locked the trade at break even. For me, I don't like doing the market cannot give me this $40. I come and lock at break even. Am I crazy? I can't do that. So I will take something up. Even if it is $20, at least for the sofa. I will come up here. I'll say, take my trade. I'll take this price, 83850. I'll go to my distance, my terminal, 83850. I'll press it. You see modify. I'll click on modify. I'll come to where I have my stop loss. This minus, the left is stop loss, the right is take profit. What was the price again?
83850.
850. So that's the price. Have you seen modify? If you don't put the right in, it will not modify. It will not at all. You see, this modify is highlighted. So you look at it down before the numbers. You see modify. I'll click on modify. That means I have modified it. I have locked this trade. I've locked the trade. I've locked the trade in profit. The other one is to lock and break even. This one is to lock with profit. That is what I have done now. That is how to do it using phone. But if it is using laptop, you just drag and drop. You drag and drop. That is what it means. You just drag and drop. Then you have it there. Hope this is clear.
Okay, sir. Thank you, sir.
Yes, welcome. All right. I think we've done justice to Fibonacci. So you have to do what is called the what's it called? Chart pattern. Chart pattern. You have chart pattern. It's either I'll be a little bit busy this period. It's either if I'm charged by Friday, I will take you on chart pattern. But if not, I will delegate a colleague that will take you on chart pattern. It's good to on chart pattern. It will take you on chart pattern. So by Friday, you have your class. You have your class on Friday. So the person will take you on chart pattern. And when you see, by the time you start learning chart pattern, that's why I said in the previous class, class that is currently in advance, we took chart pattern before we took Fibonacci. I just felt like it wasn't right. Let's take Fibonacci first before we take chart pattern. So that Fibonacci, when you were talking about chart pattern, those M and W, that's double top and double bottom, triple top and triple bottom, you will see that that's one that's you know, an M now. You have a swing up, you have a pullback. Now you have another pullback that will not take out the high. Then this other one. Once you have that thing, Fibonacci will tell you at what level you are trading. That is why sometimes some persons that does harmonics pattern, if in the future you want to be a harmonic trader, you appreciate Fibonacci very well. That's the essence of Fibonacci. For us to trade harmonics pattern. Harmonics pattern is the same thing with chart pattern, but the only difference is that harmonics gives you measurements. Harmonics give you measurement for you to identify something like a bat, something like a cipher, something like crab, something like butterfly, something like cipher, butterfly, crab.
Hello,
all
Josh.
of those names. Yeah?
Sir, please, this take profit, is it the same thing as the entry price?
No, take profit is where you want to take your profits. Entry price is where you enter the market.
Okay, there are two different things.
Yeah, very, very different things. Yeah, it's also I need to let me close this trade first. Tomorrow we'll look for another one. Yes, closed and done and dusted. Okay, so entry price is a different thing from take profits. Entry price is where the market has given you profits. You want to take your profit away from the market. Entry is where you enter the market. Take profit is like destination where you're going to. You tell the cabman, okay, I'm going to so place. But where your entry is different from where you're going out from, where your destination is. Understand? So that is the difference.
Thank you, sir.
Okay, I think we have done justice to this. So by the time we come to By the time we come to what's it called? We come to by Friday. Now we'll be talking about things like the chart patterns. Talking something like this. So we'll be taking you through all of this. Taking you through the wedges, head and shoulder pattern, inverse head and shoulder pattern, double top and double bottom. This double top and double bottom, and visit that retracement. That retracement. So that retracement will tell you, is it at 8.2 or 60 or 61.8? You should know which one you do. So this double bottom, double bottom, you have triple top and triple bottom, you have wedges, you have rising wedge, you have falling wedge, you have falling wedge, and both the continuation and all of that. You have pennants, bullish pennants, bearish pennant, flags, bullish flag, bearish flag, rectangle chart pattern, bearish rectangle, bullish rectangle chart pattern, bearish rectangle chart pattern, cup and handle chart pattern, how to identify cup and handle chart pattern. Now this is it. So that is, you have so much on that chart pattern. So if you have not gotten your manual, you can request for the manual so that you read in advance and when you start on Friday. Until then, believing there is no other question, we want to officially call the class. Please. Those in favor, say hi.
Thank you.
Those against, say nay. Guys have it. Thank you. Good evening.